Bank of America numbers are out and a little bit soft. The stock's down 2% after declining nearly 3% yesterday. Revenue coming in at $20.5 billion. The forecast was $20.8, so a little behind. EPS a little ahead, 51 cents. The forecast was 49 cents per share. Revenue year over year is down 11%. Citi's yesterday was down 7%. JP Morgan's was flat. I want to jump to net interest income in part for Joe, but also because it stands out to me. The forecast there was $10.5 billion. It's come in at $10.1 billion. That is down high teens percentage year over year for net interest income. It is, of course, quite an interest rate sensitive bank, but that really coming out stronger than expected. For JP Morgan, for example, that number yesterday was down 9%. Bank of America coming in at about down 17 or 18%. Management have guided that they think this will be the worst quarter for net interest income and it will grow again from here. But nonetheless, that decline probably a bit bigger than expected. Provisions for bad loans coming in at $1.4 billion. That's relative to $5.1 billion last quarter, so an improvement there like the other banks yesterday. In terms of that trading revenue and the fee income, up year over year, like the other banks, down quarter over quarter because of that very strong start to the first half of the year, like the other banks, but perhaps not quite as strong as it could have been. $2.1 billion for fixed income trading. Forecast was 2.2. That's only up 3% year over year. Equities, $1.2 billion. That's broadly in line with expectations. There's a bit of noise in there. There's a deferred tax asset up and there's a higher legal expense, but they kind of net each other off. Overall, that interest rate sensitivity, Andrew, really coming through, and net interest income down year over year about 17%. And the stock's down 1.4% or so today. It closed down yesterday 2.8% ahead of this.
Shepard Smith here. Thanks for watching CNBC on YouTube.